Hello and good morning to the Crypto Morning News. I'm your host, Taylor Schrum. Going to be getting into some very interesting headlines, and I'm actually going to take you through a few charts. I hope you all had a good weekend. Let me first address that what you're doing right now as an investor in the crypto space is difficult, especially if you have a sizable allocation into cryptocurrency, into altcoins, not just Bitcoin. If you're just in Bitcoin, this probably is not that difficult to you because Bitcoin is such a high conviction asset. Altcoins and cryptocurrencies, they're a little more uncertain what their future is. The higher you get to the risk curve in terms of Solana and Ethereum, it's a little easier to see that the future is extremely bright. But as you go down the risk curve, you may be sitting there kind of twiddling your thumbs, scratching your head, wondering if you should sell those assets. I'll tell you right now, I have not parted with any of my altcoins. I made a couple of rearrangements back in August, but that was unrelated to the downside we're seeing now. But for the most part, this entire bull cycle since 2023, I have not sold the vast majority of my altcoins, right? And during this pullback, I have sold zero. In fact, I've purchased a decent amount of altcoins. But I wanted to preface all of this with this is hard. This is not easy. And I know that this is not easy because it's actually challenging for me, right? There'll be days I wake up and I think to myself, what am I doing? Right. But there's so much rich information out there that I review and I review with my team. And we continually, again and again, month over month, quarter over quarter, come to the conclusion that the case for cryptocurrency has never been stronger. Now, that doesn't mean that the case for all crypto is strong. Let me make that clear. But the case for key cryptocurrencies that we talk about on our channels and in our Discord, the case for those is very, very strong. However, retail investors are not really doing what they need to do to understand what these cryptocurrencies really are and the greater financial services industry that they are on pace to go ahead and replace. Right? It's not going to be all cryptos that do that. Not going to be all cryptos that do that. That is my preface for today's episode. You are doing something that is very difficult, but with great difficulty usually comes great reward. Let's get into it. Sentiment. Bulls wait for midweek prints. We have some data coming this week. Very interesting stuff. Fear and greed ticks up barely up to 14. So we did not get into single digits for Bitcoin fear and greed, but we are still in extreme fear. 25 basis point cut in December, 46% likely. Let's look at the live read for this. 45 to 53. Okay, so that's actually not great because we did have some statements this morning from one of the Fed members. So that the net of those statements was that we are still less likely than not to see a cut in December. Now, that is different, I believe, from my last morning news, crypto morning news segment, which I did. The odds were still in favor that we would get a 50 basis point, a 25 basis point cut in December. It is now less likely, right? But when the odds are neck and neck like this, like you can see on my screen, right, it can go either way, right? So you just be aware of that. All it takes is one statement from a Fed member that they come out and say a thing, that is going to potentially move the markets. It's going to need to be somebody other than Fed member Stephen Mirren, though, I will say. Let's continue on here. That's the Fed talk. Major focus. News vacuum before NVIDIA earnings on the 19th and BLS jobs data, Bureau of Labor Statistics data on the 20th. Okay, so that is kind of what this week is about from a what we know standpoint. There's going to be things that happen that we didn't know about, of course, breaking news and things like that. But right now, we do know two things. One, NVIDIA is announcing their earnings at the end of the day on the 19th. And then the Bureau of Labor Statistics is going to be publishing this. They call it an employment situation, right? So there might be some pretty rich data for the Federal Reserve to digest and understand going into December 10th rate decision. But at this point in time, we have a massive, massive scarcity of jobs data at least that has come from the U.S. Bureau of Labor Statistics. So this is going to be pretty big. That comes on the 20th, and that's this week, Thursday. Okay, so midweek data print, a lot of eyes on that. U.S. plans to finalize trade deals with China before Thanksgiving. That's good, right? That's not the main focus of this week. This week is going to be NVIDIA and that jobs data, but this is something that's kind of lingering in the background. Thanksgiving. Just kidding. Not Thanksgiving. China finalizing deal with U.S. around rare earth minerals and soybean orders and things like that. For now, the Fed's repo facility is operating as non-QE QE. Okay, so there was a meeting over the weekend. I believe I talk about this one in the Bullish Vibes. Yes, New York Federal Reserve President John Williams met with Wall Street banks this week to discuss a key short-term lending facility. All right, so that could potentially mean more liquidity coming into the markets via the banks. Again, this is not going to rotate directly into cryptocurrency, but this could ease pressures in TradFi and generally cause a bit of a more optimistic outlook going into the new year and wrapping up Q4. With that said, though, the Fed's repo facility is open for business, right? They've made this clear. If you're unsure what I'm talking about here, the Federal Reserve has many tools. They don't just cut rates, and they don't just have the balance sheet. They have other tools to be able to inject liquidity into the markets. Okay, the Fed's reverse repo seems to be the one that is the most popular. They're the most active these days. All right, bullish vibes. Michael Saylor strategy buys 8,178 Bitcoin worth $835 million. So that's quite a big number. You'll notice that that number did not get up above 1 billion, but that's still a big number, and that's going to be some good buying pressure that came in. By the way, that already has happened, just so you're tracking. That is not going to happen. That already happened. Berkshire Hathaway purchased 4.9 billion of Google's parent company, Alphabet. Now, this one is worth camping out in a second because this gives us a little bit of perspective on this concept of money that's been coming into the market looking to go into risk that's been diverted from crypto and gone into AI stocks, right? So this is a bit of the next chapter for that, pushing the narrative forward for that dynamic in the markets, which I believe is probably bearish for crypto. Now, it's not that crypto is going to tank because of this headline, but what it tells me is that more liquidity is likely to go follow Berkshire Hathaway into Google and other AI related plays. Okay, now just to give a little bit more context on this, Berkshire Hathaway is in the most cash it's ever been in ever, by percentage and by dollar amount. And so for it to be making a play here on Google, while Google price is extremely elevated, it kind of tells you that the play for AI stocks is not over, at least at the highest part of the risk curve. So Google, you can see here on my chart, I'm showing the Google chart before the Bitcoin or Ethereum chart. Very interesting today. But here we are. It's the main headline of the day, right? Berkshire Hathaway buying Google. It's big because Berkshire has kept their cards close to the chest. They've been accumulating cash, but now they're making a pretty sizable play into Google, close to all-time highs, right? So what does that mean? It means that this AI play is just not over. It can also mean that the new leadership at Berkshire Hathaway is aggressively trying to catch up on the Mag 7 trade and obviously concentrating here into Google. So keeping these things in mind, this does not spell this. What this headline is not is Berkshire Hathaway bought a bunch of crypto, bought a bunch of Bitcoin or Ethereum, right? That's not what the headline is. It's they bought a bunch of Google. So as a crypto investor, that's how I'm reading this primarily, but there's other layers below that observation, which are, oh, interesting, Berkshire is deploying, and then, oh, interesting, they're deploying specifically into AI stocks, right? And Google is obviously more than an AI stock, but if we leave it at that level of opacity, that is how we can pull it out. Warrior said, we should have some new tariff news about food products from South America. Yeah, that could be interesting. However, I would just say that it's just, unfortunately, it's just deafening the amount of just whales that are selling into Bitcoin, and I'm going to talk about that here in a minute or two. But I don't know that tariff news with South America is really going to push the needle very much for cryptocurrency, right? I think that could actually do some interesting movement for U.S. agricultural stocks and maybe some banks that are exposed to U.S. agriculture. But for crypto investors, I don't know if those tariffs are that tariff news is going to be all that big. Really, the next thing that anybody's going to care about with tariffs in terms of crypto investing is going to be the Supreme Court just going ahead and making a ruling whether or not Donald Trump's tariff policy is legal or not, according to them, constitutional or not, according to them. And then there's going to be some potential retaliation from the Trump administration. They have said they have backup plans in case the Supreme Court rules that they can't do it. And then the other big headline is China, right? Will they sign something before Thanksgiving? Because everything so far has just been these two global world superpowers kind of positioning and jockeying and trying to figure out where the weaknesses are. Is it the rare earths, or do they really have the rare earth processing? Does the U.S. have NVIDIA? Is that really way better than Huawei? They're just trying to feel for the soft spots, and then eventually they're going to come together and say, okay, neither one of us has that big of an advantage over the other. Let's sign something and let's stick to it and continue to have global free trade. Either that's the outcome that I would want, or and I would want that as a stock and a crypto holder. Because the other outcome is if they can't size each other up, or if one of them sides gets too big of an ego and thinks that they have an advantage when they don't, that will spell a global imbalance and potentially a fracturization, and that could result in two main trading blocks globally, and that results in less global trade, which results into higher prices overall because there's less trade going on globally. Those who have the strategic advantages are not able to participate in the strategic advantages of other countries, right? A lot there. Some of it's very economic. We'll keep moving on. Warrior had a thought here. He said, I agree. Just sharing some information on headlines. Also, Switzerland tariff going down to 15% from 39 with 200 billion investments in the U.S. This is true. This is true. And we did tweet out the Switzerland headline. It's not unimportant. It is important. It's just the tariff headline stuff is in the backseat, right? It's not the one moving the market today, especially in the high risk stuff, crypto and tech. All right, let's move on here. We have some more bullish vibes. And I delineate here between bullish vibes and market focus. Market focus is what matters, right? Market focus is what is moving the market today. Bullish vibes is stuff that's great. It's good, maybe, right? It's bullish, but it's not necessarily going to trade on that. So Berkshire Hathaway buys Google in a big way, significant. Aave to launch a mobile app on the Apple App Store, providing users access to high yield crypto lending products. This is a big one. I could spend a lot of time on this. Maybe Tim will put out a video explaining this a lot more. But ultimately, this is bullish for a lot of different reasons. But it's definitely bullish for Aave. We'll move on. Japan is considering a new economic stimulus package of 17 trillion yuan, which is sounds like a lot, but it's only 110 billion under their new prime minister. So more liquidity potentially to come. New York Federal, we talked about this one. The Fed is meeting with Wall Street banks. I imagine they do that all the time, but apparently this one needs to be published that they had this meeting, and they discussed key short-term lending facilities, right? Free money, right? Or cheap money, at least, getting injected. Liquidity is needed. Japan considers reducing crypto tax rate to flat 20% capital gains tax. Looking ahead, we talked about some of this stuff, but looking ahead, November 19th, NVIDIA earnings. November 20th, BLS publishes employment data, right? This stuff here, whatever this means, employment situation. I'm kind of bracing because there could be a lot of volatility around this, right? There's been a scarcity, there's been a dearth of labor data, and now we're about to get a bunch of it all at the same time. If some of that stuff is what not what the market was expecting, meaning it was not priced in, that could have some volatile effects over on the equity side. And big ripples in the equity side can affect crypto, often does affect crypto. All right, December 1st, QT ends. It's already scheduled. That is happening. That's been discussed. December 10th, FOMC decision, Supreme Court ruling on tariffs is going to be further out, and then economic data published. Lots to unpack. That is actually now in the foreground. We know the date for that. That's going to be the 20th on Thursday. Okay. Asia closed red. This is the chart I want to show you guys because this is the OG whale dumping frequency. Now, this is data aggregated by Glassnode, and essentially, these different colors, these kind of fall colors, they're in the fall theme here. But you can see red is the spent value of 7-year-old wallets that have one or 2 billion. So very big is red. Yellow is 7-year wallets with 100 million in Bitcoin or more. And then black is obviously the Bitcoin price. Okay, so two main colors here, red and like orange, yellow. Two main colors. So you can see that in the past, in 2021, there were periods where the concentration was at the top. Okay, and then in previous bull markets here, 2018, the concentration was at the top as a percentage, obviously as a percentage. Not a lot of OG whales dumping in 2018 for obvious reasons. 2022 through 2023, there were whales that were probably kind of late to the party, and they sold into the bearishness. But here in 2021, we had a huge concentration, a very thick band of selling in 2021 that really defined that sell-off. And they sold into strength, notably, right? Meaning as the price was going higher, they unloaded into a big mass of people, a big mass of volume buying the Bitcoin, right? So that their sales wouldn't do what we're seeing today, okay? So fast forward to today, and by the way, Bitcoin's price has come a bit lower here because this data is from, I believe the 10th of November. But anyway, you can see there's been quite a bit more whale selling this time around since 2024 into 2025. But what you'll notice is it's less condensed, right? It's much more scattered. What you'll also notice is there's a lot more red lines, a lot more OG whales having 1 to 2 billion or a half a billion. I think that's what it is. Half a billion. I mean, big wallets, right? Having half a billion Bitcoin, they're doing a lot of selling. Now, there's a lot of speculation why they're doing the selling, because that's important. Are they doing the selling because, they think Bitcoin is the worst thing ever? Probably not. That is probably not the sentiment, but there's going to be some of that cypherpunk, hey, Bitcoin is losing its cypherpunk, so I'm going to sell. But the reality is that the majority of these wallets are managed by people and or firms that are in billions of dollars in profit. These are OGs. To make them OGs, they had to have held for 7 or more years, right? So that means that these folks are up a lot of money, okay? There's an analyst named Jordi Visser who has gone viral in the last couple of weeks for describing what you see on the screen here as essentially a Bitcoin IPO. Now, Bitcoin never had an IPO. Cryptos usually don't have that happen in the same way that you see IPOs in the stock market. And I'm not going to get into exactly what I mean by all that. Hopefully you have some TradFi experience to understand what that means. But the main takeaway for a crypto investor is that there's been a big distribution now from OG whales to people who are not OG whales, whether that's institutions like BlackRock and the ETFs, or whether that's the digital asset treasury companies like MicroStrategy and Nakamoto, or other ones, CEP. So there's this distribution, right? And so the OG whales are selling to somebody, right? And so when there's a lot of selling by people who have a lot of Bitcoin and demand generally stays flat, then you have lower prices. And because the price has gone down and because Bitcoin is held by so many retail folks like you and me, retail is much more prone to emotion, right? And that's why we keep track of fear and greed. So in this period where Bitcoin's price is going down, retail is very fearful. And so there's not as much buying as there was back here. And so there isn't this big strength period, right? Where the whales can just sell into and it keeps going higher. Whereas here, it's been much more sustained. And this is good. This is good because the buyers have been more spread out. And so the whales have been more spread out over time. Okay. We spent a lot of time on this chart, but ultimately, I don't know that I've really brought to you all's attention how much the OG whales are selling. And that is important. That's an important dynamic. It doesn't mean to me that I'm any less bullish. It's just what it means to me is that there's a distribution phase going on, kind of a post IPO moment where the guys who got in super early are taking some profit. But that doesn't mean that the party's over. It means that what happens when a stock IPOs is that the JP Morgans, the Morgan Stanleys that underwrote the IPO, they get out at the higher price. And usually there's quite a bit of a sell-off. But then new institutions that trade the public equities, right? They come in and they buy what they think is the bottom, and then it starts to trade back up. And then either it turns into Amazon or it turns into AOL, right? And so that's the story of how IPOs go. The early guys get out when the IPO happens, they sell for a huge profit, and then the idea is truly tested in the public markets. It's been in the private markets and private equity, and then IPO brings it into the public markets, and it's a much bigger pool of liquidity that then bets, hey, this is the next Amazon, or no, that's actually the next AOL, and they try to find vulnerabilities and then short that asset. Bitcoin is now kind of in that IPO phase. I would generally agree with Jordy Vischer that we're now in that IPO phase for Bitcoin. So is it make or break? Kinda, right? There's more pressure in a different phase to say, okay, Bitcoin's made it this far. Is it ready for prime time? Meaning, is this going to actually get into everybody's 401ks like we've been talking about? Is this going to actually be a cryptocurrency that is sent to pay for homes and to collateralize mortgages? And while all the infrastructure is there for that to happen, we have yet to see if it's going to truly proliferate through the global economy and start to replace things like the dollar and bonds in how mortgages are collateralized, how loans are collateralized, how money is sent across borders, and how people ultimately save and store value outside of things like gold and real estate and stocks. Okay. So we're in that post IPO phase. My guess is that this is very bullish. My analysis is that this is very bullish because every time those OG whales sell, that's more supply that enters the market and gets distributed to people who are extremely diverse, right? And so it's much more difficult to predict when they're going to sell. And so on average, you can kind of project that there's going to be a lot less selling pressure from the people who now own that Bitcoin that was previously in the hands of OG whales, that at the drop of a dime could act on a rational incentive and sell all their Bitcoin, right? Now that's no longer possible because that Bitcoin that was held by one person is now held by potentially hundreds of thousands of people. And some of those people are going to continue to sell maybe over time, but not the whole pool. Okay. All right. Hopefully that makes sense to you all. That's the benefit of an IPO, by the way, is that you have access to bigger liquidity, but you cannot control who owns it. Okay. So that's something that's good to know for you all, that is going on. Let's take a look here at the Bitcoin charts. Bitcoin has been going down and to the right. We want it as Bitcoin investors to go up and to the right, but as experienced Bitcoin investors, we do not get upset when it comes down and to the right because that is opportunities to buy. Now I'm going to go over to the CME price, the CME charts here, because this is a big important level, right? This is the CME gap. And we derive this gap level from this previous gap back here, which we have to actually, you can see it on the 4-hour. Wow. Okay, so you can see this here is called a gap. I've got to get my writing tool here. This gap will be filled. right? Statistically, gaps are usually filled in general, okay, to the upside and to the downside. Now, there was a pretty big gap that was filled recently. Don't know where that was exactly. Let's see. But this is the one that's now up to be filled. And we got into it a little bit, right? We had some wicks down into this level, but this level ends here, the CME gap ends at 91.64, 91.6, right? And we did not get down there, right? So it's likely, in my opinion, that Bitcoin has not sold off as much as it's going to sell off, and that will likely come down here. Now, there's also something called getting oversold. At this point in time, the gravity of this CME gap just makes too much sense to get filled, right? And so a lot of bears are going to exploit that, and a lot of experienced bulls are going to stay on the sideline and say, okay, I'm bullish on this asset. I want to participate in the post IPO phase of Bitcoin. However, if there's clearly a CME gap here, and anybody with 2 brain cells on Twitter is tweeting about the CME gap, I'm going to wait and see if we can get down that level, because I would much rather buy Bitcoin at 91.6 than to buy it at 94, right? And after all, if I have liquidity and I wasn't deploying all my liquidity above 100K, then that means I'm smart. And so smart people are now the majority of the bulls that are in crypto, that are in Bitcoin, right? So they're sitting there. It's a lot of smart money, and smart money is much more patient, okay? That's why we're seeing sustained movements to the downside, because everybody who wasn't smart deployed above 100K. And when I say smart, I mean 20, 30 years of experience trading assets, probably highly volatile assets. So if you're listening to the sound of my voice, you're saying, I deployed everything above 100K. I'm not trying to offend you. I'm just trying to give you context for the type of participation that we're seeing here below 100K. So what we want to see here is a bottom, though. And I'm looking for a bottom. I'm waiting for a bottom. But what you have to realize is there's something called oversold. And so even though the gap is here the gap closes down at 91.6, there's a chance that we get oversold. And that's where the 88 level comes in. Maybe we get there, maybe we don't, right? As a trader, obviously you need to know. You have to track that and have certain levels of certainty. But as an investor in Bitcoin, and as an investor in the technology that Bitcoin is, I don't really care in the short term. This is super key. This is where I'm going to leave it. I don't really care as a Bitcoin investor what the price is in the short term. In fact, I have an incentive for the price to be lower in the short term so that I can buy more. And if you've been in crypto for more than an hour, then you've probably heard that before and you're rolling your eyes. Oh, somebody on YouTube talking about Bitcoin and saying they're happy because the price is going lower. But it is true. If you walk into your local grocery store and they say, hey, welcome to the grocery store, everything is 90% off today, right? Your quantity demanded just went up, right? Because it's like, oh, I would have had to pay $5 for a bushel of bananas. Now I only have to pay $1.50. Okay, I want all the bananas, right? Or you're probably going to go into the canned goods section and buy up everything that's non-perishable so you can store it, right? Soup that may have cost $3 a can, and you can get it for 25 cents or something like this. I'm going to go buy a whole bunch. So the same dynamics exist for Bitcoin. The reason why we haven't seen that V-shaped recovery yet is because bulls still think that price can go lower. So they're not deploying quite yet. We have this CME gap. It shows a clear level down at 91.6. And then there probably will be a period of overselling. So the bulls know this, right? I'm going to be surprised if we don't see a V-shape recovery, meaning a V-shape reversal for Bitcoin between 92 and 88. If we go lower than 88, then we're going to have another conversation, right? But for right now, I have my confidence is that we're going to see. It may take a while. That's the thing with this as well, is we may hang out down here into January, right? We may come down here and just fill this gap, hang out, maybe even come back and test higher, right? But ultimately completely fill the gap and then do the oversold bit and then make a move higher. And we could be in January by then, right? I didn't show that on my chart, but you have to be prepared for the time aspect of this too, not just the price aspect of this. Very good stuff here. We have a lot of comments, but I'm actually way over time. Yeah. Overall, I'm very bullish, and I'm happy that the prices are lower so that I can buy more. Again, if you walk into a grocery store and your favorite soup, your favorite cereal, your favorite whatever was 50% off or 80% off, you wouldn't say, oh, this thing, you know what, food's going to zero. I'm just going to turn around and go get in my car and go home. No, you're going to say, holy crap, I'm going to buy as much food as I possibly can because my dollar or my euro or my peso or whatever it is goes further today in this grocery store. Your peso goes further today in the crypto markets, but you have to make sure that you're investing in assets that are going to do well. You can't buy junk today and expect that to do well for you. You can't walk into that grocery store and just go buy a bunch of candy and expect that to be good nourishment for you. No, you have to buy good crypto. And we talk about what those good cryptos are. I'll give you a hint. Ethereum, great crypto. Solana, great crypto. Bitcoin, obviously fantastic crypto. Now, is there a 0% chance that these assets that I just listed can't continue to go much lower or fail? No, it's not 0% chance, but it's a better chance that these assets recover and go back to all-time highs plus than the rest of crypto. Does that make sense? Right? That's how the risk curve works. I'm going to leave you all. I hope you all have a great rest of the day. Morning news, generally a vacuum until we get to midweek when we get those NVIDIA prints and we get the BLS data. That could potentially see the Fed rate cut likelihood increase. Those two data prints. We'll see. Adios.